we've seen the Fed come in at various times in the last decade, maybe the last 20 years. But there's one thing that we haven't had when the Fed comes in, and that's high inflation. So this inflation is off the charts, and it really makes the Fed's job so much harder. And again, the Fed, I mean, the Fed is not necessarily the end-all cure-all for the market environment. I mean, many people are speculating that the Fed's going to pivot just because we've seen a few economic reports come out showing that inflation is starting to moderate. Yeah, I think inflation peaked with the June CPI report that was released in July. But I also think, and it will come down in the next week when the June CPI released in June. Okay. The July CPI will be lower. But I think the problem is it's going to remain elevated. And the Fed says, well, we want to bring inflation down to 2%. You can't get inflation down to 2% and have the stock market go up and have rates go down on the 10-year and 30-year. That's not going to happen. The Fed is going to keep going and going until they bring inflation down to that 2%. I think we're going to go into a recession. I feel pretty strong about it. And a lot of people that have said in the past, well, inflation is transitory, they're moving to the camp that we could have a mild recession. I don't think recessions are ever mild, and recessions are not necessarily cured by the Fed's early actions. The Fed can start cutting rates, enacting QE, but still unemployment will go higher. And I've seen that happen in the data in the past. I mean, the unemployment rate from last month was 3.6%. And people are talking about the Fed pivoting at this level. I think that that's ill-advised. And there was another person, I'll just kind of go on this because I think it's important. There was another person out there in the Twitter world who's a research analyst who is very well respected. And he claimed that he believes that the market has bottomed, the equity markets have bottomed, and that's possible. And we're moving to the 1982 Volcker moment when he pivoted. Now, the ISM manufacturing just came out today. It's at 52.8. The ISM back in 1982, August of 82, was under 40. It's a big difference. It was contracting for a long time. The unemployment rate went from 5.2% in February of 1980 to that around 10%, I think it was 10%. And the Fed with Volcker started to pivot after actually about 3 months before the unemployment rate peaked. And that's 30 months. So I think that people are getting ahead of themselves, and that's been talked about. And I think the Fed's going to really clamp down on all of this. So I think that the macro is much different than other periods, and people expecting the Fed to pivot to save them, I think it's ill-advised.
If you enjoyed this video clip, click here to watch another one you should like.